In 2001, Enron was worth $63 billion. Wall Street's favorite stock. Analysts screamed buy. And then, in just a few weeks, it was worth nothing. But here's the thing. The warning signs were hiding in plain sight. In the financial statements. For years. I've spent 50 years reading balance sheets. And if there's one skill that separates the investors who survive from the ones who get wiped out, it's this. Knowing how to spot when the numbers are lying. Most people never learn it. They trust the headline. They trust the analyst. They trust the smiling CEO. Today, I'm going to show you the 4 red flags that exposed the biggest accounting frauds in history. And the fourth one is the one almost everyone misses. Here's the first rule. A company can fake profits. It's much, much harder to fake cash. Net income is an opinion. Cash flow is closer to a fact. So when you see earnings climbing year after year, but the cash from operations isn't keeping up, pay attention. That gap is where the lies live. Look at WorldCom. In the early 2000s, the company reported billions in profit. But behind the scenes, they were taking ordinary operating expenses, the everyday cost of running the network, and pretending they were long-term investments. It's called capitalizing expenses. The fraud eventually totaled around $11 billion. When it unraveled in 2002, WorldCom filed the largest bankruptcy in American history at the time, over $100 billion in assets. And that gap? It's the first thing I check on any company. But the second red flag is sneakier. Imagine you run a lemonade stand. Last year you sold $1,000 of lemonade. This year, $2,000. Sales doubled, great. But what if the money owed to you tripled? That means you're selling lemonade to people who haven't paid. Or maybe never will. That's accounts receivable. And when it grows faster than revenue, it often means a company is stuffing the channel booking sales today that may evaporate tomorrow. The technical measure is days sales outstanding. When that number creeps up quarter after quarter, something's wrong with the quality of those sales. This is the kind of detail buried in a footnote that nobody reads. But the third flag? It brought down a company Wall Street called untouchable. Enron's real genius wasn't energy trading. It was hiding debt. They created hundreds of separate entities, these complex partnerships with names like Raptor and LJM, and they shoved their losses and borrowings into them. So the parent company looked lean, profitable, glamorous. The debt was real. It was just somewhere else. When investigators finally pulled the curtain back, Enron collapsed in December of 2001. Its auditor, Arthur Andersen, one of the most respected accounting firms in the world, 89 years old, collapsed right alongside it. Here's the lesson. When the footnotes get so complicated that you can't follow the money, that complexity isn't an accident. Charlie Munger put it perfectly. He said something along the lines of, if you don't understand it, don't invest in it. And the fourth red flag is the one that should scare you the most. Sometimes the fraud isn't clever at all. Sometimes the money is simply not there. In 2020, a German company called Wirecard, a stock market darling, valued in the tens of billions, a member of Germany's prestigious DAX index, admitted that €1.9 billion sitting on its balance sheet never existed. It was fake. The auditors had signed off for years. So how do you protect yourself when even the auditors miss it? You watch for the meta-signals. A company that suddenly changes auditors. Filings that show up late. Profits that are always adjusted and one-time every single quarter. When non-recurring charges recur like clockwork, they're not non-recurring. They're just expenses with a costume on. Here's what 50 years has taught me. Fraud is loud, but the warning signs are quiet. They don't shout from the headlines. They whisper from the cash flow statement and the footnotes. There's even a tool built for this, the Benaish M-score, created by Professor Mesed Benaish in 1999. It uses 8 financial ratios to flag potential manipulation. And famously, it would have flagged Enron as a likely manipulator from its own published numbers before the collapse. The math was there. People just didn't look. So remember this. The numbers always tell the truth eventually. Your job is to read them before everyone else does. Now I'm curious. Have you ever owned a stock that turned out to be hiding something? Tell me what tipped you off in the comments. And look, this is educational content, not financial advice, so always do your own research before you invest $1. If this changed how you'll read a balance sheet, hit subscribe. We do this every single day. Tomorrow, we're breaking down the one ratio that reveals whether a company can survive a recession.